Hi, you are watching Property Soul Podcast and I'm Vina It. It has been a month since the introduction of the new cooling measures. In this episode, we will check the impact of higher ABSD and lower loan-to-value on the property market. Firstly, what are we seeing in the new launch market and what is going to happen next? Secondly, what is happening in the collective sale market and what are owners doing? Lastly, what are the latest URA Q2 statistics and SRX July HDB resale and non-landed resale numbers telling us? Under market uncertainties, developers' new launch strategy is to offer discounts to attract first-time buyers. The last weekend of July saw Daintree residents offering 5% discount to buyers. Despite this, it only managed to move 50 units or 15% out of 327 units. Over at Podo Passe, UOL is giving over 10% discount at the chat floor. Prices are 5 to 10% lower compared with the nearby Park Colonial. Buyers who are mostly Singaporeans and first-time buyers bought 140 or 19% of 729 units. The result is a far cry from the new projects launched in the first half of the year, when 76% of the veranda residences and 85% of the twin view were sold during the first weekend. Yet, these projects were sold at premium prices at that time. The new sale market has definitely cooled off after July 5th. On top of higher entry costs, buyers are also facing the uncertainties of market slowdown and oversupply, as well as the impact of trade war and interest rate hike. When the ghost month is around the corner, it is not a good time to launch new projects now. So the second new launch strategy of developers is to delay and buy some time. But they can't drag for too long. With a limited pool of first-time buyers, developers are playing a musical chair game. Sooner or later, they can't find enough chairs in the market to take over the new units. When market direction changes, even if they are willing to slash prices, they may not find buyers. For projects that are queuing to be launched in the coming quarters, developers have no choice but to keep lowering prices to clear the stock before the 5-year deadline. The Greek Singapore sale starts with 5 to 10% discount. Very soon, the discount level will go down to 15 or 20%. Further reduction usually offer everything at half price. At the final stage, leftovers are sold at 70 or 80% off. By that time, shoppers are aware because those who want to buy would have already bought. Last month, several collective sale tenders were closed without finding a buyer. They have to extend the deadline of some on-board deals, including Horizon Towers, Katong Plaza, and Fortune Park. After the announcement of the new curbs, Mr. Koo Sew Yung said he hoped those committed on-boards will not be broken and the developers won't back out of it. Unfortunately, T-Land had to forfeit their 1% deposit and back out from the 60 million collective sale at Teck Kwan View, a freehold development at Upper East Coast Road. Let's hope there won't be more following Teck Kwan View's example. Anyway, I don't see owners of on-board sales snapping up units in new projects for 3 simple reasons. Firstly, for the amounts they get, it is hard to buy a unit of comparable size from a new launch in the same area, and the purchase will leave them much less cash for retirement. Secondly, it takes several years to see the completion of new projects. If they don't want to rent a place in between, they may choose to buy resale units instead. Older projects also offer bigger size units and more affordable prices compared with the new ones. Or alternatively, they can move into HDB flats to hold more cash for retirement. The Housing Development Board statistics show that the number of HDB resale transactions increased 33% from 4,458 in Q1 to 5,941 in Q2. URA just released the second quarter real estate statistics on July 27. Rentals of private residential properties increased by 1% that last quarter. Although it is still early to say that the private rental market has recovered, I noticed that the rental market of landed properties jumped 3.6% last quarter. Landed houses suffers the most in a soft rental market. If there is no increase of foreigners and no increase of average family size, the only explanation is that there are more displaced en bloc owners renting landed properties. Please note that the ULAQ2 statistics are market numbers before the new curves, while the SLX numbers are the latest July figures on HDB resale and non-landed private resale market. Developers are adding 4,000 to 5,000 new units to the total supply every 3 months, but the market is only able to absorb 1,500 to 2,400 units per quarter. Although it is the OCR that sold more new sale and resale units every quarter, most of the unsold units are concentrated in the RCR. The property price index of RCR just climbed 5.6% last quarter. If you're planning to buy in RCR, there is no need to rush in because there is plenty of supply in the pipeline. SLX July non-landed private resale flash report shows that although resale prices are up 1%, it comes mainly from CCR. On the other hand, resale volume has dropped 2.8%. In fact, the number of resale transactions has been falling since April from 1,600 to over 1,000 resale units a month. Volume is actually down 32% since April. SLX July HDB resale flash report shows that HDB prices are continuing on its way down. There is no hope of having more upgraders if HDB owners cannot sell their flats at a good price and are asked to fork out 5% more cash for down payment at the same time. On the other hand, there is an encouraging increase of 28% in the number of HDB resale flats sold last month. With new cooling measures kicked in last month, it won't be surprising to see more settling for HDB flats rather than condo units. Orange Tea and Thai told the media that there are 3 factors that may mitigate a supply glut in the long term. First is a shift in demand for larger units in the coming months. Second, the collective sale market is slowing, which may contribute to a drop in housing supply. Third, home demand should continue to be healthy as Singapore's economy is still strong. First, while I can only see more buyers going for affordable, smaller sized units under the lower loan-to-value, Orange Tea can project a picture with more large unit buyers who are happy to fork out more of that 5% upfront cash. There will definitely be far more owner-occupiers than property investors, but they are buying resale instead of new launch. Unless they are really cash-rich, home buyers are deterred by buying larger size and luxury homes because of 4% buyer stamp duty, higher ABST and lower loan-to-value. Second, whether there is new cooling measures or collective sale, the problem of oversupply of new projects and shrinking size of buyers have always been there. Even if collective sale slows down or comes to a complete stop, is our government stopping release of new sites altogether? Third, it is arguable whether Singapore's economy is still strong. MDI Flash estimate shows that Singapore's economic growth slows to 3.8% in Q2. Growth in manufacturing has tapered off. The construction industry remains the underperformer. The side effect of the new cooling measures is that everyone suddenly all comes to their senses. You see less people who keep saying that prices will continue to climb. If you're the only one who's still singing the bullish tone, you are losing your audience here. That's all for today. Remember to subscribe to my YouTube channel. Thanks for watching. Take care and talk to you soon.